Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, June 24th, 2019, and we are now in the final hour of the trading day. As most of you know, in my opinion, the closing prices of the day are the most valid prices of the day and therefore the best prices to make my buying and selling decisions from. Anyway, let's see. I just want to make sure everybody can hear me and that we're coming through. Let's take a look. All right, looks like we are. Hey Andy, how you doing? Good afternoon to you too, my friend. Hope you had a good weekend. Currently the Dow Jones is up about 30 points, the NASDAQ is down 15, and the SPY is down 1.89. So kind of a mixed bag, nothing too crazy today. So what we're going to do today, the format as usual, first thing we're going to do is we're going to go ahead and run the legal disclaimer. Then we're going to come back, we're going to take a look at my current positions, and we're going to discuss when I bought them, why I bought them, how I'm going to manage them going forward. After that, we're going to go over to my watch list, and we're going to take a look at each stock in my watch list one by one, go down through the charts, analyze the technicals, analyze the support, the resistance, see if there's any type of possible setup for me to take at the end of the day. And then after that, after the market has closed, if you have any questions at all for me about anything I discussed, if you need some clarity on anything I discussed, or if you'd like me to take a look at a particular stock, or any questions at all, feel free to ask. I'm very happy to answer them for you. So, all right. So let's take a look. All right. Hey, Mount Doji, how you doing, my friend? Good to see you. Weekend was good. Did a lot of hiking. It was nice weather. Cleaned the house. Just regular stuff. Frederick, how you doing, my friend? Good to see you from France. I did get your email, and I am going to show the chart after the market closes, and we'll take a look at that V1 that you liked. So anyway, all right, well, hold on a second, about 40 seconds. I'll be back. We're going to run the legal disclaimer, and I'll be right back. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, good. So I did create a video over the weekend about V1s and V2s. You know, you hear me talk about these all the time, and they're such an important part of my trading as far as a trigger or, you know, a signal to get me into a setup or a trade. Remember, big picture, you want to have a setup. You want to have some kind of setup, like double bottom with the divergence, a pullback into value, a fractal, something like that, right? But in a lot of these setups, you need an actual trigger. So it's a two-step process. One, identifying the setup, and then two, some kind of price action that will get you into the trade. And V1s and V2s are my setups. I mean, I rely on V1s and V2s so much, and they're really the bread and butter of my trading career. So I did create a video over the weekend. It's on YouTube. I'm going to post a link right here in the chat, and then I also posted a link in the description of this video. So, you know, there's some nuances to V1s, V2s. V1s, V2s happen all the time, but it doesn't mean you just immediately, oh, there's a V1, V2. You know, there's subtleties about which ones are good and which ones maybe aren't so good. So in the video, I really tried to get specific. So if you get a chance, take a look. I posted the link in the chat, or it's in the description of this video. But if you really don't quite have these V1s, V2s figured out yet, do yourself a favor and watch that. I think it will help. All right. So let's go ahead, take a look at my current positions and what I'm going to do with them and how I'm going to manage them going forward. So I did buy IWM here on the 19th of June. I would have bought it the day before with the strong close above the 200 and the 50-day moving average, but we had the Fed meeting the next day, so I did end up buying it on the 19th of June at 154.54. The next day it gapped up strongly. I got out of about 25% of my position here, and that's why I like to phase out as it moves up, because not only if it moves up, I'm taking something that the market's giving me, but in case it reverses like it does today, then I have fewer shares on the downside. So I get out of more to the upside, and if it goes down, I have fewer to the downside. So we are underwater on this trade. But again, you have to factor in that we took about 25% off up here. So my initial stop on this was a close under the 100-day moving average. The reason I picked the 100-day was because it was upward sloping. I like to use upward sloping moving averages as my stops. I like them better than downward sloping moving averages. So Friday it held in there and I kept the trade. Today you can see that we've dumped. And if this closes under the 100-day moving average, I'm going to go ahead and just get rid of it. But you know, this chart gives a good example of how you can play mind tricks with yourself and start thinking, well, maybe I ought to just hold it to the 20. Maybe just hold it to the 50. It's at a 50.45 RSI. You know, I could talk myself into keeping this trade. We have the 20 below us, we have the 200 below us, we're holding the 50 RSI. I could talk myself into holding this trade. And, you know, those are valid points. You know, those are valid points. You do have some support underneath you. You do have 50 RSI underneath you. But the point I'm trying to make is when you analyze and get into your trade, stick with the trade, stick with your plan. This was my plan under the 100-day. Now, if I talked myself into giving it one more day, maybe it rally back up. It certainly could. But if it goes down, then I'm really going to feel bad. I'm like, damn, why didn't I just stick with my original plan? And sometimes your original plan is going to be correct. Sometimes it's going to be incorrect. But at the very least, you can feel good about yourself that you created a plan and you stuck with the plan. You know, if you don't have a plan, then you can do anything. You can talk yourself into anything. As low as it goes, you can say, oh, well, there's probably some support way down there, and now we're getting close to a 30 RSI, right? So my advice is when you enter your trade, come up with your plan and just go ahead and exit when you're supposed to, even though you can justify and fabricate other things to the downside. So this will be a losing trade, not as much as normal because I did take 25% off. And again, that's why I do that. But unless we have some miracle and we close back above the 100-day moving average right here, I will be exiting this trade for a loss. All right, here is MasterCard. So we entered MasterCard here on the 19th of June, and this is a perfect example of a really nice V2. So it moved up, came back down in a nice orderly fashion back into the value zone, which is the 1 ATR and the negative 1 ATR channels, the green channels, moved down into the value zone, started moving sidewards, spiked down and reversed. And again, for a V2, we need 3 bars. Day 1, day 2 needs to go below day 1's low by at least a quarter ATR. And then day 3 needs to close above day 1's close. And that's exactly what happens. So we have a nice upward move. We have a pullback, which is normal. We move sideways. We wash out the prior low. Day 3 closes above day 1's close. It happens within the channel. And the important part of happening within the channel is, the easiest movement is the middle of the channel up to the 3rd ATR, the middle of the channel down to the 3rd ATR. That's kind of the sweet spot for me. In my experience, that's the easiest movement. Once you start getting past the 3rd ATR, sometimes you can have mega runs, there's no doubt. But statistically, when you start getting up into those areas, you're pulling the rubber band pretty tight. You can see right here, MasterCard is exactly where it got. As a matter of fact, I shorted MasterCard here because we went above 70 and we closed below 70. We went above the 3rd ATR channel, we closed below the 3rd ATR channel. So we did have a nice short trade on this down to here. I got out of the short, went long, and as you can see, we've had a nice move up. I think I hit 3 profit targets on that first day. Friday kind of went down a little bit. Today it is up a little bit. You can see I did hit 1 profit target as well. So I believe I've hit 4 profit targets. I'm out of about 45% of this trade at the moment. What will be, how am I going to manage this going forward? Probably a close below the previous day's low. So tomorrow, if we close below today's low, I would get out. Today, if we close below Friday's low, I would go ahead and just lock in that profit. But it's been a really nice trade. Mount Doji says, definitely be looking at the V1, V2 video later. Good. I hope you like it, Mount Doji. Let me know. Christian Hall. Hey, Christian Hall. Nice to see you. Yo, show me team. Show me the money team. I guess that's what we're trying to be, right? Is the money team. So thanks for coming by, Christian. Appreciate it. All right. Philip Morris. So I did buy Philip Morris back here on the 20th of June, and the reason I bought it was a couple reasons. Firstly, we come into this downtrend, obvious big sell-off, right? But then we start moving sideways, showing that there's some accumulation of this stock. The stock really, it tried here, it tried here, it tried here, it tried here. It tried to make lower lows, but there weren't enough sellers to keep it down there. So that's good. That gives us some good information. It gives us some good information that the market tried to get to these levels. The market did not like these levels. If the market tests the level over and over and it keeps reversing and reversing, eventually it's probably going to move the other way. So we did have this nice base. I do like a base because when we have these, not a lot of movement up or down, just sideways, 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 that is eventually going to lead to some kind of strong move, one way or the other. We don't know which way, we don't know when it's going to happen, but you can feel pretty confident that it is going to happen. So you have to wait for the price action to show you something is starting to break. So I did buy it back here, and the reason I bought it on the 20th of June was we finally broke above the 10-day moving average. It was a long time, over a month, since it had closed over the 10-day moving average. And if price is under a moving average for a long time, can't close above, your first indication that something might be changing is when it does close above a particular moving average. So back on the 20th when I bought it, it did close above the 10-day moving average. It also triggered a V2. Not a high quality V2, I will give you that. But here's day 1, day 2, barely washes out day 1, day 3 closes above day 1. So technically it's a V2. If I would not take this trade just based upon this kind of V2, but I had some other accompanying indicators that were going in my favor. V2, We closed above the 10-day moving average. MACD went positive. Volume started to pick up. So you can see I did buy it here at 77.22. Friday we had a big monster day. Sold 2 profit targets. This is a counter trend trade, so I did sell about 40% of my position on Friday because it's a counter trend. If it's a trend trade, I'm going to phase out of fewer shares. If it's a counter trend trade, I'm going to phase out of more shares. So anyway, we did have a good day on Friday. It was a monster. We hit 2 profit targets today. One thing I should point out. On Friday, we did close above a 50 RSI, right? Which is good because any close back above 50 RSI shows a lot of upward momentum. Today, however, we're down a little bit, nothing too concerning. It is down 1%, but right now we're at a 48.92. So it did test the 50 RSI earlier in the day. And today, I mean, if we're not closed yet, but if we do close under 50, I'll go ahead, just take a 2-day trade on this. Nice trade, got some at the high. And so if this does close under the under the 50 RSI, I will go ahead and just call this a good, nice 2-day trade. Now, if it closes above the 50, I will probably keep it. And if it closes above the 50 and then in the coming days goes over the 200 and keeps the 200, I will keep it. If it closes back under the 200, I will get out. If it in the coming days intraday goes above the 200 and then closes below the 200, that will also be a signal to get out. If it closes above, I'll just keep it and I'll keep trailing all the way. So that's the plan with Philip Morris. It was a really nice trade. So we'll have to watch this at the end of the day to see if it closes below 50 RSI. Okay, QQQs. So I did buy the Qs back here on the 4th of June. And why did I buy it? By the way, this was a mechanical trade. So I have no discretion in this trade. I either keep this as long as it's above the 250 or I sell it when it goes below the 250. So that was my initial entry. It closed above the 250-day moving average. If it closes back under, I'm going to get out. This is a good quantified back-tested system where you stay in above the 250 and you get out below the 250. So in addition to closing above the 250, we did have a V2 day 1. Day 2 washes out day 1. Day 3 closes above day 1. And in addition to that, the previous day we were under 30 RSI. We were under the 3rd ATR channel. So there were a lot of setups here. And I did buy here, and you can see it's been a monster trade ever since we entered. I've been phasing out. Every time it moves up, I phase out of a little bit of my position, a little bit of my position. But this is a mechanical trade. So either it's going to continue to move up and I'm going to phase out until I'm out of shares, or it's going to come all the way back down here, which seems kind of ridiculous to let it go all the way back down there, right? But I'm trying to make the point that this is a mechanical trade. I'm just going to trade it mechanically the way it was designed. So I only have about 15% of my shares left, so it's not a big deal either way. But I did want to just keep a hold of this trade just as a good example to you on, seeing the entire trade through. So it's down slightly today, but this has been a monster trade. From bottom to the top up there, it was almost 8.73%, and that's on an index. So that is a great move. So going forward, phase out if it continues to go my way, and I'll get out of the 15% if it comes all the way back down here. All right, so the SPY. So I do buy the SPY every day at the end of the market. Right at the close, I buy my regular position of SPY. I sell it first thing in the morning. So why do I do that? I know a lot of you hear this every day, but in case we have some new listeners, I want to explain. So this is based upon a study by @Bespoke Invest. And it's a really powerful study. So The back test goes like this. Since 1993, if you would have bought the SPY on the open in the morning, sold it on the close in the afternoon, each day since 1993, you would have actually returned a negative 5.2%. But if you did the opposite and you bought the SPY at the close of the market, sold it first thing in the morning since 1993, you would have actually returned 568%, meaning more than all performance came in after hours trading. So, think about that. Since 1993, the performance from the SPY has come in after hours trading, in the aftermarket and in the pre-market. The red line here is the regular trading hours. The green line here is the after hours. All the gains came in after hours. So if you're a day trader, what you have to contend with, you have to contend that the moves don't happen in the day. And that's when you're trading. That's why it's so tough to be a day trader. There's just not a lot of meat on the bone. The meat comes in the after hours in the pre-market. So this was up till 2017. This is a more recent study up to 19. The buy in the morning, sell in the afternoon, instead of returning negative 5.2, would have returned negative 13.9. And the return of buying in the afternoon, selling in the morning, instead of 568, was 634. And then Stephen Burns did a more recent study up to about a week ago, and the buy in the morning or buy in the afternoon, sell in the morning was actually a 712.63% return. So it's very, very clear, everyone, that this is a good long-term back-tested approach. Doesn't mean you're going to have drawdowns. You can have substantial drawdowns, as you can see from the chart. But you have to look at this as a long-term trading strategy that you do every day with the correct position size. I use a 10% position size. Now, Steve Burns also did let me see, is Steve on here today? Oh, there he is. Hey, Steve. Good to see you, my friend. Nice to see you, and thank you for coming by. It's always an honor to have you here. Alpha happens when you're sleeping. Yeah, that's exactly what Steve's saying. Is that, the alpha, the return happens in the after hours. So Steve was nice enough to do a analysis on UPRO. Now, UPRO is actually the 3 times leverage S&P, right? So buying $1 UPRO actually is like buying $3 of the S&P. It's a 3 times leverage. And UPRO hasn't been around as long as the S&P, but let's take a look at these returns. This is the same approach, buying in the afternoon, selling in the morning on UPRO. Now keep in mind, this is 3 times leveraged, okay? So, but from 2009 to 2019, approximately 10 years, there's some partial years in here, but maybe just a little less than 10 years, the same approach actually returned 997%. Now, I went back and took a look at the numbers. Steve, you sent me, the actual numbers that you did on the SPY, and I compared them through the same years. And when you adjust for the triple leverage, what I found was that if you went on the regular S&P from 2009 to 19, you would have had about a 200% return. But if you adjust on the UPRO, would you adjust for the 3 times leverage, so apples to apples, it actually turned out to be a 300% return on the UPRO compared to the S&P, which was a 200%. So those are the figures that I came up with. I don't know if you took a look at that or agree with that, but those are the kind of the quick and dirty numbers that I looked at. So, goes to show you, whether it's the SPY or the UPRO, there is a huge edge in holding overnight, and not just with the S&P, but the S&P is a combination of 500 different stocks. So probably about any stock that you're trading, holding overnight is an edge. So, I mean, that's amazing. I mean, not over 900% return in about 10 years, just buying at the close, selling in the morning. So, I want to do some more work with this, and actually I have some questions for Steve that I'd like to ask him about how to approach this because of the 3 times leveraged. Instead of taking a 10% position size, I may take a 3.33% position size to equal everything out. So anyway, thank you, Steve, so much for sending that. I really appreciate that. It's really eye-opening. And but back to the SPY, I actually did make just a little bit of profit. You can see where I bought and then where I got filled. It was very, very small, but still higher. I did get filled higher than where we are today. So small profit on the SPY today. All right. Verizon. So I did buy Verizon back here on, I actually did buy it here, but then it went against me. I bought it on because we broke out of this fractal right here that was inside the band, turned around, went against me, got out here when it closed under the moving averages. So that was a loss. I did re-enter back on the 19th of June. Based upon this higher low V2, day 1, day 2, day 3, day 2 washes out. Day 1, no, excuse me, bought here. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. So I did phase out a little here, and as you can see, it has moved up nicely since then. I did hit one profit target today at 58.28. Oh, got close to that second profit target, but didn't quite get there today. So this trade is working out nicely so far. You can see that the moving averages all started to come together here. Now they're starting to fan out, which is a good sign. How am I going to manage this trade going forward? It has moved nicely up from my entry. So probably a close below the previous day's low, or a close below the 5-day moving average is probably how I would manage this. But this is up today on a down day, which is always a good sign. So we'll just continue to hold this until we have a reason not to. All right. Take a look here at everything. Yeah, Steve, it was an interesting study. I really appreciate you doing that. That's right, Mount Doji. You did get a SPY dividend. That's also the beauty, is that you do get a dividend because you're buying at night, selling in the morning, even if it's ex-dividend date. Oh, by the way, Steve, were dividends factored into that? Because UPRO does pay a dividend. Just a thought, but I'm pretty sure that UPRO pays the dividend just like the SPY does. So, all right. Mount Doji says, I was preaching the SPY buy at the close and sell at the open trade all weekend to my homie. Good. Yeah. Spread the word. Spread the word. All right. So before we get into taking a look at current positions, I did find something that Steve posted here that I really liked from Lone Stock Trader. And by the way, if you don't subscribe to Steve Burns on Twitter, you're doing yourself a really disservice. At S Joseph Burns, he has such good material that he posts every day. I did see one post that says, I've learned more from Steve Burns' Twitter postings that I have in three weekend trading seminars, and I couldn't agree more. So do yourself a favor. He also has a great website, newtraderu.com. And so if you haven't gone to that, I would really recommend it. He has some really nice courses there. He has a weekly, or he has a 3-time weekly video newsletter where he analyzes the markets. He has really good articles. Hey, look at this one. This looks like a good one. How to use V1 and V2 entry signals in trading. Post by Greg Gossett. And he's nice enough to share this on his site. So this is a really good site, newtraderu.com. Do yourself a favor and go to that. Okay, so but Steve shared this from Lone Stock Trader. Lone Stock Trader is also a really good Twitter page to subscribe to, at Lone Stock Trader. But don't give up on trading. It is a difficult skill to acquire. It will require years of trial and error before you get good at it. Once acquired, the skill will allow you to compound your money for the rest of your life like nothing else can. And it's true, folks, trading is a skill. Learning the basics, learning the technicals, that's a skill. No doubt you have to learn those. But in my opinion, once you have those down, the real skill comes in battling your emotions, sticking to your plan, all the emotional and psychological stuff that I talk about. In my book, that's really where the skill comes from, the self-mastery, the not getting mad when you lose, the being able to, take 3 or 4 or 5 weeks of losses in a row, but still staying resilient and being able to take that next trade. And that, by the way, comes with proper position sizing. It is a skill, just like any other skill. It takes time. You're not going to acquire the skill if you jump into the market, you use too large a position sizes, you blow up your account. You're never going to have the experience you need. So in order to get good at trading, you need experience. In order to get experience, you have to stay in the game. And in order to stay in the game, you can't blow up your account. So even if you have a small account right now, don't worry about how much money you're making. Just go through the process, step by step, consistent, every day. If you have $10,000, you make a 12% return, you made $1,200, right? It's not life-changing. It's not really going to do anything for you, but it is building your skill set and your process of trading so that, down the line, when you get more money, you're able to trade more money, and then it will be more meaningful. Steve says, I did this off capital gains only. That's okay. So with that UPRO, you are going to have a little extra on there because you're going to get dividends as well. Steve Burns says, successful trading principles also double as life skills. Oh man, is that the truth, Steve? I look at everything like risk to reward, even outside of trading. Should I date this girl? A little risky. Not quite sure if the reward's there on that, right? So, buying a house, a business deal, you'll start to look at everything risk to reward. At least I do. And patience and all the other things that you'll be able to overlay them onto your regular life as well. Mount Doji says, I definitely have days that make me want to quit, but I remind myself that I'm young and adversity makes me better. That's true, Mount Doji. Don't quit, but position size correctly so you don't get hurt. That's the important part, right? So anyway, don't give up on trading. It's a difficult skill to acquire. It requires years of trial and error before you get good at it. Remember that. But once accompanying, the skill will allow you to compound your money for the rest of your life like nothing else can. So thanks to Steve S. Joseph Burns for posting that, and thanks to Lone Stock Trader at Lone Stock Trader. I think that's an important message. All right. Well, it seems like the market is, I think the NASDAQ's the one that's having the hard time today. All right. So let's go through and take a look and see if there's anything that is interesting for us today. Apple. I don't have a position in Apple. I did take a position back here on the 7th of June when we closed above the 200. It was only a 2-day trade. I got scared of the, oh no, wait. When was the Fed meeting? Now I can't remember. Oh yeah, I did get out here. This was just a 2-day trade when it rejected the third ATR channel, but good trade nonetheless. This is under a 10-50 EMA cross, which is a good back-tested long-term approach, but at the moment I don't have Apple. Advanced micro devices. So we are working on a V1 today, but I don't like this V1 that much right now just because of the I'd like to see this move forward or sideways for a couple more days, stab down below the 50, then close back up, create a V1 or a V2 after we have tested the 50. So nothing on AMD today. Amazon is up slightly today. I did take Amazon back when we had right here on the 14th of June when we had the 5 cross back above the 50 SMA. That's a good solid back tested approach. I did hold this for 2 days. I got out here because the next day was the Fed meeting. So it has moved up a little bit since I've sold it, but I wanted to play it safe and get out ahead of the Fed meeting because sometimes those can be very volatile. But anyway, this was a nice 2-day trade. For those of you that are in this crossover, I hope this just keeps moving up your way. It is a good back-tested, quantified approach, trend trading approach to trading Amazon, but nothing today. Boeing did have that big, strong move above the 200-day. I was waiting to buy this on a backfill at about 50% of this move. It never quite got there, and it's just kind of moved up ever since. So I'm just going to have to let that one go. Alibaba, I was considering buying this here over the 200, but again, the next day was the Fed meeting, kind of got me out of my groove there. Then it gapped up, reversed back. I didn't want to buy it because we had this close below the open. So who knows? This could keep moving up, but really in order for me to take a fresh look at this, I would need to move back down, maybe a V1, V2, a close back below the 200-day moving average, close back above, something like that. Caterpillar, excuse me. You know, we had this break above the 200-day moving average. I didn't buy it because the RSI was a little high. But as I mentioned a few days ago, I have noticed these patterns a lot of the times just keep chugging higher, and that's exactly what it's doing. But it didn't fit my parameters as far as my entry signals because the RSI was too high. But, you know, if I were in Caterpillar at the moment, you know, keep that baby until you know, it either closes back below the 70 RSI or possibly close back below the 200. If it closes back below the 200, then I get a V1 higher low V1 V2 trigger back over the 200. I might consider buying it there. Canopy growth. Well, I drew this line a few days ago because I said if it gets down and tests this low, it might be an interesting place to go ahead and buy this. And this is a really good example, everybody, of a double bottom with the bullish divergence. I learned this from studying one-on-one with Dr. Alexander Elder. This is one of his favorite setups where you have a low, and then you have the readings of the MACD, then you have a rally, then you come back down, you test that low, but the readings of the MACD are either very shallow, less than half of the previous MACD bars, or non-existent, like in this case. You know, here we did come back down, test the low, and there's not even any red bars. Dr. Alexander Elder calls that a missing right shoulder. So I guess I was pretty close to marking that level because that's about exactly where it came. Now, would I buy it today? It is a V1, right? Here's day one. Day two washes out day one, closes above, close back in the channel. But no, I would not. And the reason why is that we're at a 41.37 RSI. If this continues to rally, we'll probably rally up into the 50 RSI point before we get some resistance, if it does go that far. But that's probably where it will run into some resistance. So, you know, my reward would probably be from here to here. My stop is probably from here to close below here. So that's only a 1-to-1 ratio. So I don't like that ratio. You know, my guess is this is going to move up for a couple more days. Then the people that bought here are going to be looking to sell. That might drive it down. If I can get a V1, V2 now, a higher low V1, V2 and close back above the 200, that would be how I would approach canopy growth. Hey, Dr. Jorgensen. Kangaroo tail to the upside. Weed. Yes, this is the weed stock. So yeah, it is a kangaroo tail. It is a V1, but in the context of where the RSI is, I'm just going to have to let this one go and be patient and wait for a better setup, like a higher low V1, V2 would be a better setup. Cisco made this double top here, did create a V1 to the downside on Friday, washed out day one, closed below day one. A lot of volume, but that's because that was the quad witching day on options. Nothing really there for me on Cisco today. SPY. Nothing really there. We had this kangaroo negative or bearish kangaroo tail to the downside. Looks like we did lose the 70 RSI. Nothing on SPY for me today. Disney. Well, you know, we made a high, we made a higher high. Now we're coming back down. We're coming back into the value zone. And if you watch my V1, V2 video, this is what you want to see. You want to see a move back into the value zone, have the price move sideways for a little while, show that it's going to stop going down, have a spike down, test those prices. If it reverses back up, that would be my entry. I did buy Disney back here on the 3rd of June. Because of this nice V2 formation. Here's day one, day two washes out day one, day three closes above day one. It did test the ATR channel to the downside a few times and rejected, and that was a really nice trade. We wrote that from here up to here. I was waiting for a pullback and I did get it, but I didn't get a signal. I didn't get a trigger to get back into the trade. So going forward, I'd like to see Disney pull back into the value zone and then get a V1, V2 to go back up and test these highs. Etsy had a nice move up, but like some other stocks now, we are pulling back into the value zone. We are in the value zone right now, but just because it's in the value zone doesn't mean I want to buy it. The setup is getting there. It's getting into the area that I'm interested in, but now I need to see the price action do something. And I'd like to see this stop going down. See how we're just down and down? Hasn't proven to me that we've run out of sellers here at this point. So, you know, if it stops moving downwards and starts moving sidewards, goes down, tests that one ATR channel, immediately comes back up, triggers a V1, V2, that would be my entry signal on Etsy. Ford is, you know, pulling back into the value zone. It is showing that it's kind of starting to run out of some sellers. If it continues to do this, spikes down, reverses while we're in the value zone, that would be my trigger. I did buy Ford here and here when we broke above this fractal. Took it for 2 days to the upside, which was good, and then we had the Fed meeting, so I got out, but that was a nice profitable trade for a couple days. So nothing on Ford. Facebook is up today, bucking the trend. That's great. I know Steve has Facebook based upon the 1050 SMA crossover, which is good back-tested crossover. I'm not in that particular trade, so I don't think I'm going to be buying anything here, but I hope that goes up for you, Steve. But the 1050 SMA is a good back-tested long-term trend trading approach on Facebook. And I think, oh, maybe I don't have it here. Yeah, I don't have it here, sorry. Five below. You know, this is a good example here, everybody, of a really nice V2 on the weekly. So we have a higher high, we come back down into the value zone, we move sidewards, shows that, you know, no more sellings coming into the market. We do take 1 week where we test, go back above. I did buy here. I did get out for a slight profit because of the Fed meeting, which was good because that did save me. But the point, because it's moved down, but the point I was trying to make is when you have a nice setup, you have a V1 or V2 setup, if the market does not take off in your direction within a couple bars, it's a bad omen. Especially when you have such a beautiful setup like this, it should move. It should continue up in the direction if it's a solid. But you can see it took 2 bars, did not start to move up, that's a bad omen. The best trades come when you get the move you want in the first couple bars. So you can see it's a big down day today. Luckily, we don't have that anymore. We'll see how it responds here at the 200-day moving average. Gold, it's just rocketing on up again. This really scares me. It would scare me to be long here. It would scare me to be short here. I had some people ask me if they should short gold. I was like, absolutely not. You just don't know what's going to happen here. And this thing is a monster. I did buy gold back here on May 30th in a much more relaxed and less volatile situation when we took out the fractal over here of May 23rd. We had a 520 EMA crossover. It happened within the channels. I know this is a little hard to see because the chart has been skewed, but we did take a really nice trade here, phased out all the way to here. It was a beautiful trade. I was looking for a pullback into the value zone, but the market didn't want to give it to me. And up here, I thought, boy, that was good, got out just perfect. But the market had other ideas. So it's pretty crazy. It's interesting why gold is going up so much. I mean, the dollar's going down, we know that, but this is like a six-year breakout, something like that. So nothing on gold today. Google. Possibly if we get a close above the 200-day, I might be interested in Google. Goldman Sachs tested the 200-day moving average today and rejected it. Nothing here on IBB. I did buy it here when we broke above this fractal. It was a 2-day trade. I got out here before the Fed meeting. Let's take a look here. Ooh. All right. Boy, I'm going to run out of time. I have to run through these quickly. Intel, nothing. IWM, we're going to get out. Coca-Cola, nothing there. Lockheed Martin, did have a nice trade from here to here on this V1. But nothing there today. MasterCard we're going to have to watch that. 3M is moving up nicely. Merck, nothing there today. Microsoft having another big day up. Boy, that's been a monster. Netflix bounced off that 200, but nothing there today. Nike, big reversal bar today. Big reversal bar. So nothing there. Philip Morris, we did buy here. If this closes under the 50 RSI, I'm going to go ahead and just lock in profits on that trade. PayPal, nothing there. Qs we have. Silver, big rocket day today again. Whew. SPY, we're going to be buying the SPY at the end of the day. Square is holding above the 200-day moving average. I did buy, but nothing here today. I did buy Square here with this V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. In addition, we made a lower low with a bullish MACD divergence reading, closed back up into the channel, also closed back up into the range. This was a monster trade I phased out from here up to here. That total distance 14%. I didn't quite get the 14%, but I did phase. But that was a monster trade where you have a lot of signals coming together at the same time. AT&T, nothing there today. Bonds, nothing there. Tesla, nothing there. UNG, big strong day today. Whew. Oil up again today. Dollar down again today. Boy, dollar's having a tough time. If we get down into this 30 RSI range near the 200, that might be interesting, but not today. Visa, nothing. VIX, it's kind of consolidating down here. Verizon we have, so that was up today, did hit one profit target. Energy Select, Nothing there. Financials just kind of chopping around, but nothing there. Real estate moving down. Utilities up a little bit, and healthcare. You know, I missed healthcare here. I just missed this trade at the end of the day. I would have bought this with the close above the 200, get out with the close underneath it. And sometimes missing that just by one little amount, boy, it cost you. Look at that great trade we would have had on that, but I did miss it. So I don't see anything today whatsoever as far as initiating a new position. So let's turn our attention to current positions. IWM, we are definitely going to have to get out of this. Now, again, I could say, well, I can give it another day, see if it's going to hold at the 200. And who knows, that might be right. But my plan was a close under the 100 day. I'm getting out. And so I'm going to stick with the plan, take the loss on the IWM. MasterCard. That one looks fine. There's nothing we need to do with MasterCard. Oh, Philip Morris is coming back. So, or to the wrong way, downwards. So I will be exiting Philip Morris because we lost the 50-day. We were above it and below it, but still a nice profitable trade. We took about 40% off here, and then we'll take the rest of here. Q's, no problem. SPY, definitely good that we got out earlier in the morning today at the higher price. Now it's lower. And Verizon. So the plan for today is we're going to sell. I'm going to sell my IWM because it's closing under the 200-day moving average. We're going to sell Philip Morris because it's closing under the 50 RSI. Qs are fine, and then we're going to buy I'm going to buy my regular position of SPY for the overnight trade. Makes sense? All right. All right, let me see. Okay. And then after the market closes today, like I said, if you have any questions, I'm more than happy to answer your questions, look at any charts, give you my humble opinion. So, we've had this nice run, and unless you have a signal, probably better just to sit on your hands and do nothing, like I am today. I mean, I went through the whole list. I don't see any signals. I think we need to reset a little bit. Maybe we need to come back down into value and then look for some kind of entry. But we pushed pretty far to the highs on the upside, and I think we just maybe possibly ran out of buyers at the moment. All right, so we have 7 minutes. I want to take a look at the S&P intraday. So yeah, we've just been dripping down the entire time. All right. Yeah, it's interesting. The Dow's still up, but the NASDAQ is down and the S&P's down. I actually sold a put today on Advanced Micro Devices, and I'll just take a couple minutes here and explain why. I did sell these down to $24 July 19th, so just under a month. But as long as this price stays over the $24 mark, I will be able to keep the entire premium from selling the puts. If it does get down to $24, I'll be obligated to buy it there, but I'll tell you the reason why I picked $24. Let's look at this on the monthly. $24, just slightly under the 10-day moving average. We should hold some support on the 10-month moving average. if you go to the weekly, see how the $24 mark dovetails nicely with the 50-week moving average and also the bottom of the channel. And then on the daily, this price down here will, depends what day it gets there, but will be in the low 30 RSIs, and then it's kind of in between the 200 and the 250. So based upon 3 time frames, we should find some support at 24 on the monthly there. We should find some support at the on the weekly at $24 at the 50-week moving average and the third ATR channel. And then on the daily, we should find some support at the low 30 RSIs in addition to the 2 major moving averages. So we'll see how that works out. I'm very careful when I sell puts. It can be very dangerous if the price just goes rushing right down through. So when I look at selling puts, I really look at where am I really okay with buying this stock, at what price if I have to buy it. So that's July 19th this expires. So that gives me about close to 18% protection to the downside. So we'll see. Doesn't mean it can't get down there. All right, so I'm going to start cleaning house here. I'm going to sell my IWM.
Order filled.
So IWM is gone. That was a loss. I trade several accounts, so I have to do this several different times.
Order filled.
All right, so IWM is gone. MasterCard, if it does close below the previous day's low, I also would get out of that. So let's just mark that. Philip Morris, definitely going to have to take that off the table now. But it was a profitable trade, which is nice.
Order partially filled.
All right, so Philip Morris is gone.
Order filled.
In one account.
Order partially filled.
In 2 accounts.
Order filled.
All right. So IWM is gone. We're holding on to MasterCard. As long as it holds above that line, though. $264.90. And Verizon is still doing well. All right. And then I need to buy the SPY trade.
Order partially filled. Order filled. Order partially filled.
293.60.
Order filled.
All right. That is our new entry price on the SPY when we'll be selling that first thing in the morning. So we did have a red day today. We haven't had many of those, but they are part of trading. And, you know, it's important that you get used to them because there's going to be periods where you're going to have them for days on end, weeks on end, sometimes a month on end. So let's see. Yeah. So no new positions. We got rid of IWM. We got rid of Philip Morris. We still have MasterCard. We still have the Qs. We entered our SPY position, and we still have Verizon. So, yeah, that's how it goes. But not too bad of a day today. But it's because I didn't have that too large a position. So anyway, after the market closes here, let's get to questions and answers. So think of any questions that you have. And before we get to that, I did want to mention
Order cancelled.
that I do offer private one-on-one coaching and mentoring and teaching lessons in the evening time via Skype. So, you know, if you would like to kind of take your trading to the next level, working one-on-one with your teacher really does help. You know, I've done it with Stephen Burns. I've done it with Dr. Alexander Elder. I've done it with Carrie Lavorne. And, you know, I can't tell you how important it is when you're learning something, not just to read books, but to also work with the author or work with the teacher. It really does help. So my contact information is in the description of this video. My hourly rates are also there. And so if it's of interest to you, let me know. Just send me an email or send me a message on Twitter. And usually it starts with a phone call, just a free phone call, get to know each other. I'd like to learn more about you, what your trading experience is, what your challenges are, and then I'll go ahead and put together, you know, a good solid trading plan that fits your personality. So, and then also, if you like this video and you find these videos helpful or the channel helpful, subscribe to the channel if you haven't already. And you know, hit the thumbs up button on this video. It really does help with Google and letting people know about the channel. There's a lot of people out there that really struggle with trading. You know, they're losing money, they get depressed, and I think this channel can help them. As a matter of fact, I have a call tonight with a gentleman, same thing. He almost wants to give up on trading. He just can't make any money. So I'm really looking forward to speaking with him tonight on Skype to hopefully get something turned around for him. So, all right. Well, that's that. The market, the Dow closed up 10 points, the NASDAQ down 26, and the S&P down 5. So, seems more violent. The prices seem more violent to the downside than the indexes indicate. All right. So, Frederick from France sent me a chart that he wanted me to look at, and it's a good example here. This is kind of a sneaky chart. And
Order cancelled.
Down here you can see he makes an arrow and he says a V1. Well, it is true. That is a V1. But what, let me see. Can I enlarge this thing? Oh, I guess I can't. Now, one of the requirements of a V1 is that you have to wash out the prior day's bar, but the prior day's bar cannot be larger than 1 ATR. This looks like a small bar, right? But it gapped from the day before, right? See where the dotted green line is? So this makes this bar actually this big. It's a little sneaky because this one looks like it's little, but it's actually bigger. And so my guess would be that that bar is possibly larger than 1 ATR. Now, we have a double bottom here, but he doesn't have MACD on here, so I don't know if this is a double bottom with the bullish divergence. If it was, and what was the RSI? Well, close to 30, so not bad. Actually, all in all, not bad. I'd like to see the MACD bars to see if there was a double bottom with the divergence. That would make me feel a little better. So the chart's a little incomplete for me to make an actual decision on, but if we did have a double bottom with the divergence, and I think we probably did, because look at the RSI reading here. See where it is right here, about 30? Do you see over here the RSI reading? We're under 30. So we're lower now, and our RSI reading is higher than over here where we were higher and the RSI reading was lower. So this is a RSI divergence. And so if there's an RSI divergence, there's probably a MACD divergence. And it looks like intraday we went under 30 and then back over. So, you know, it's a little incomplete chart for me, Frederick, but all in all, it doesn't look bad. I think the risk to reward is probably pretty good with the close under 30 as your exit, and probably a target up here at your 20-day moving average. So the risk to rewards there. I just wish I could see what the MACD was, but all in all, it's pretty good. But I did want to show you that this bar looks small, but it's actually larger because the previous day it gapped down from there. And I don't have ATR channels on here, so I can't gauge if that's larger than 1 ATR. Hope that helps, Frederick. All right. Well, does anyone else have any other questions? Just type them in the chat. Happy to answer. But, let's be careful out there. We've had some reversals here. We're having some down days. A lot of volume today down on IWM. We've had great month, made some nice money, hit yearly highs in the account, which is I'm very, very grateful for. But, let's be careful not to give it back. Let's be careful and be patient. Wait for our entries. We've had a lot of stocks with the prices move above the 1 ATR channel. We want to see them move back into value. That's step one. Then after step one is some kind of trigger to get us triggered back into the trade. Frederick says it touches the third ATR. Oh, okay. That's right. You can't put a lot of indicators. So this is the third ATR channel. Okay. Now that's positive too. That's positive too, but I'm still trying to get an idea of how far one ATR channel is. So this is three ATR channels. So I guess about this from here to here would be one ATR. It's probably okay then. You have a double bottom. You probably have a MACD divergence. You have an RSI divergence. You bounced off the third ATR channel, and it looks like that bar then was not larger than 1 ATR. So yeah, probably would be a pretty good, decent entry. Good eye, Frederick. You're going through these things with a fine-tooth comb, which is important. Mount Doji says, no other questions today. I feel like this will be a weird last week of a crazy June. Yeah, I kind of get that feeling too, Mount Doji. So let's be careful. Frederick says, yes, thanks, need to subscribe to a chart platform. Frederick, I think stockcharts.com, I think they have a free version, stockcharts.com. I do know a lot of people that use that. I know Steve Burns uses stockcharts.com. And I believe they have a free version where you can probably put as many indicators on there as you want, or at least more than yours, because I think you can only put 3 or 4 or 5 on here. I can't remember. And then I use Trade Navigator. I've used this for over 20 years, so I'm so used to it, but it is really, really good. It is a subscription though that you have to pay for. But the thing I like about this is I have my what if bar, so I can tell, where something is going to be a 30 RSI, which is really helpful for me. But as far as just kind of basically getting your charts together, stockcharts.com I think might be a good free alternative for you, Frederick. Frederick says, the big red bar is not too big. Well, yes, the red bar is really big, but as far as V1s, V2s go, you wouldn't want to take a V1, V2 up against this red bar. No way. But now we are 3 bars removed from the big down bar. Like, see this little bar here? You wouldn't want to take a V1 against that because it's too big. But now we've had 2 days where it's kind of settled down and the range has shrinked. So, it always concerns me when you have big bars like this in your recent past. There's no doubt. But, on the other hand, you do have a lot of things going for you. You have a low, you have a rally, you have a lower low. I know for sure you have a RSI divergence, so most likely you have a MACD divergence. You did bounce off the 30 RSI, you did bounce off the third ATR channel, and you did trigger a V1. So yes, all in all, I think the risk to reward, the big picture here, looks pretty good. Mount Doji says, have a great day. I'm going to go through my watch list to see if there are any other interesting setups or posts on Twitter. Okay, sounds good. Let me know, Mount Doji, if you do. And be sure to watch the V1, V2 video if you get a chance. We use those all the time. So in that particular video, that's all I talk about, V1, V2s. All right, everybody. Well, Invisible Hand says, oh, crap. Oh, crap, what, Invisible Hand? Nice to see you, by the way. Frederick says, okay, understand, thanks. Good, 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 good. All right. All right, so it's a red one in the books, but that happens sometimes, everybody. So it's important to position size correctly so that when you do have red days, they don't affect you going forward. The worst thing in the world is if you get, beat up 2, 3, 4 days, and then you just don't have it in you to take that next signal. And a lot of times that next signal is the one that goes. So always position size correctly. It's not just about capital, it's about mental capital and psychological and not being destabilized. And really the only way you can do that is 1, not trade, or 2, trade with proper small conservative position sizes, 5 to 10% position sizes of your total capital. Andy says, we'll watch the new vid tonight. Thanks, Greg. You're welcome, Andy. It's good seeing you. And so thanks for coming by, Andy. Thanks for coming by, Frederick. Thanks for coming by, Invisible Hand. Thanks for coming by, Mount Doji. And Stephen Burns, thank you as always. It's always an honor. Dr. Jorgensen, thank you. I cover everybody? I think so. Frederick says, it's better to keep a list or 2 screen randomly stocked to find a setup. I personally like to have a list because I know those stocks. I see them every day. I kind of get an idea of their personality. And then again, I create that list on purpose where they're big cap stocks. They have institutional followings. There's liquidity there. The bid-ask spread is not too wide. And they're diversified. They're also diversified. So my particular preference, Frederick, is to have a watch list of a variety of stocks, big cap stocks, well-known stocks. I know some people just screen, but your screen may come up with the result where I have no idea about that company. And I kind of want to know a little bit about the company as well. So, all right, everybody. Well, thanks for coming by today. I do appreciate it. Try to come by, visit us tomorrow, and we'll take a look at this market. We'll analyze it again, and we'll see if we can find something to buy tomorrow. So, last hour of the market tomorrow on Tuesday. So, enjoy the rest of your day, everybody. Oh, and if you have any questions that you didn't get to today, feel free to email them or send me a message on Twitter. So, have a great day, everybody, and we'll talk to you later. Bye-bye.